This is B75 indices. On bigger time frame, you see the highest is getting to the lowest point the market gets to is currently around this place. Let's put it. Yes, good. Oh, yes. So let's give it red. So for you to know, we are removing this. So basically, this is the red. This is the highest point. This is the middle point. Immediately break the middle point. Declining, declining. Now, what will you do? You draw a trend line up to this. Then we finally turn this same trend line into this, like a channel. Like a channel example like this now. Once you draw this at its firm, don't change anything. Just clone it. Then take it to the last. Take it to the last one here. To this last. Immediately you do that, just lock it. Then you can change it to red. So that's how that one comes about. So therefore, we discover that since here is where we need to pay more attention to, sometimes we might have something like this. A sharp decline, the ranging, then bearish flag pattern, bearish, you can see that can happen, but we need to go into this thing more and more to know what it is in details. So after I observe, I discovered that after this low, it created this, then there is a change of character up towards uptrend. So I mark the bottom and I clone it and I put it here. So it's giving me a new channel indicating what? Uptrend. Ever since then, immediately I do that, let's go to 4 hours. So I've been discovered that the market has been bullish. After this W sharp pattern, discovers, then boom, up, decline. So the market has done this again. So when you see something like this, definitely you should understand better that we are back to uptrend because this was the previous low, then a new low was created and change of character happened here. A push up, a push back, a push up, we show uptrend. So good. Since we know that we are back to uptrend, we need to put more of our perspective into buying. So let's go to 1 hour. So from 1 hour, we discover that after it has been formed, something is here again, a change of character, bullish. Same thing is repeating here. Same thing this market is doing here too. So now we discover that after this low, a high, a lower low. How can we able to identify this thing very well? Now observe. With our help of Fibonacci, let's take it up to this. You discover that the market traced below, even extremely below to this, but there is a strong support zone there. So since the market has tap, then the market give us what? First relay. The first relay, then market range. Then second relay. Since the second relay is not that much than this, the market decline. So whenever we have something like this, that means the market is getting ready to come back and pick that same race again just to rerun. If we have that, then we have something like this. The liquidity has been tapped. Then if you observe now, from this point of view, let's start from this. A low, a high, a higher low, a higher high, higher low, higher high. Similarity of what? Uptrend. But check what happened now. A change of character. Same thing he always do here. Same thing he always do here. Now, that same thing he's doing here too. So, what do we do? Whenever we are in this such a situation, remember this is institutional reference point and there is no other reference point here that is more valid than this. There is a fair value gap here, fair value gap here, fair value gap here. So this place, if you observe very well, you can see the green has not mitigated this. So since it has not taken, this is a signal for our entry, a strong one. Then we need to confirm how sure are we from this. Now take from this point, then take your Fibonacci from here to the highest point the market has getting to. I want to check something now. So this is the highest the market has getting to over there. Check. It is in 0.78. 0.78 Fibonacci retracement. So therefore, and that is the perfect discount. That is the perfect discount zone for a sniper entry into this market. So therefore, we need to wait till that. That's why I have my set up here. I should have used this. I should have used the stop loss below this. Yes, it is advisable to use that. But do you know the reason why? We have no other institutional reference point here. So that's one of the reasons why I tighten the Excel here. So I'm risking less. Risking less. Now let's go to 15 minutes time frame and observe what is going on. You can see we are in channel form. We are in channel form down to downtrend. So once we have something like this, we should always focus on what? Selling for now. Selling for now. Because of what? If you take a trend line the way it is up to this moment, let's remove this. If you take a trend line from here to this, you discover that after a touch, market break, a retest below, the market start declining. Good. That is sign of downtrend. Good. So once we have such things, you should know, wow, we are in downtrend. Since we are in downtrend, then what do we need to do? You will wait for your setup here. You will wait for your setup here. Then can you see you then wait. Once you get here, then you buy long. Buy long. So that's it. And if you can confirm it now, once we take a two, first touch, second touch, then you pick it to the bottom. You may ask me, why did I get this? Just delete this first. Then take this, take this one, this particular one I'm moving. Put it here. Let it touch the second one. Then clone it. Just clone it. Then pick it like that. Put it here. So immediately you do that, it has given a strong support. So you can change it to red, depend on your choice. So I'll be turning this back to red. I've done with it. I don't want to make any other color to confuse me. So whenever we have something like this, then you should know it is moving uptrend. So that's why you see me staying here. There are three things that is there now. One, a valid order block is there. A valid order block is there on 1 hour's time frame, which is bigger time frame. Two, close to my psychological level. Three, close to my trend line. Can you see? But before I can opt on this trade, I need to see something like this, a shift in market structure, like this. Good. A pullback, then I'll opt on the trade. And let's assume it like this. Yes. Let's assume the markets come down. You need to have something like this. Pullback like this. A few swing, then a pullback, a break of structure, then I'll wait for entry. Then where am I buying to? Shifted this. Where am I buying to? Buying up to this high first. That's the first thing. This, well, this is the one I would prefer. That's the analysis for B75. Thank you for your time. So let's go to 15 minutes time for someone to come. Certain things. The market has been struggling in this range. So it is more of ranging markets and a micro level. You can see ranging market. So it can be a continuation chart pattern when we have something like this. They are dragging within themselves. Then continue back. But once it gets here, and I see something like a shift in structure, it pull back, then up to the trade. Without that shift in structure, then a pullback, not trading. I'm not trading. So that's the kind of setup I have for to trade.